Hello friends, good morning. How are you? Vladimir here. This is the Daily Forecast 4 of March 2014. Let's quick go over the fundamental because it's going to be very interesting day. We have cash rate and the statement from Canada. We have services PMI in Britain, and we have the ADP pre-report for the non-farm payrolls that will be published on Friday. Definitely worth to pay attention to. Then we continue with ISM from USA and the retail sales and trade balance from Australia. Tomorrow is also a very important day by cash rate and statements from Britain and Euro, but we will cover it tomorrow. So, what's the best opportunities we can deal with? First of all, let's once again remind this is non-farm payroll week, which means moves can be annoying. Some of them can be ugly, zigzagging, ranging, false breaking, all correct. So keep in mind to keep your risk very limited. That's the main things I look to trade right now. Pound dollar, I want it to make one more push to the downside, start and complete its divergence as well. Come very close to the trend line we can see right here, and from this point going to the next support somewhere in between, I will be looking for buy opportunities by dropping to lower time frames and find there patterns, divergences, false break, trend line breaks, whatever it is to give me the entry to a trade. And from this place, if we reach it, of course, I would expect the pair to start and make the move back to gap first of all, then probably last high and maybe even new highs to be created. Next one is the dollar yen, which is dropping a bit since yesterday. From my point of view, while this high holds, we still remain under bearish pressure, and if I read the chart correct, then this double wave correction should be over right now, and from here we will probably start to expect continuation to the downside. If that's how it's going to operate, then this is what should happen. Right after this place, that's where we should face it dropping down to, which means below 19, or at least 119, getting very close to there. There is one thing to pay attention to, that the trend line, which might make some troubles. That's a bit above 119 in this case. That's a channel we are moving in, so we definitely will have to pay attention to this level. Breaking below that should bring for more of continuation. One thing to remember, non-farm payrolls week, yen pairs could be the most trickiest ones. Next one on the list, euro dollar. Now I know that many want to trade this one and many want to short this one, and that's exactly where I would be careful with. Why? Because it starts to seem that the euro dollar building a wedge. Wedge means it could be the beginning of the reversal. Include the monster divergence starts to form everywhere. Daily, 4 hours slowly starting to form, 1 hour starting to form. Actually, it's continuing to form. Later or sooner, that could give the boost and make the move to the upside, and that's something to pay attention to, and that's what I want to try and trade if we actually reach these levels. That's below 111.50, this wave duplication. That would be also the bottom line retest. We might see a false break there forming, and from there we might go in a bite, because the way it looks, and if the divergence completes itself, buy could take place. And yes, the euro is under massive bearish momentum, okay? But remember, too much money is trying to catch these sells, right? And that's where things could go the opposite way, and that's where they could catch the stop losses. So remember that and careful with that. Very important. So once again, basically the idea is below 111.50, look for possible buys forming, maybe with the the classical false break or trend line and false break and divergences, and we might face a buy right from there. The next one is dollar Canadian. Now it's a mystery. It's a bit of a mystery because I was confident yesterday with a buy setup with a bullish divergence, making two waves up. Then news came in and changed the game. Today we have a cash rate, and that's the time to start and to pay attention for the daily, which is also seen on the 4-hour chart, triangle. That is the one that should bring the next direction. Here or there, time will tell. Okay, so that one to follow definitely. And that brings me to pound Canadian, which I want to buy as well, a bit lower. I marked this Fibonacci for you so you can see the duplication well. If you don't like the Fibonacci like myself, then you can just rely on support resistances. In our case, that's the monster support with wave duplication. From here, I would definitely want to be involved with the buys. Now, as for now, because after the news on Canada and Britain to come also today and tomorrow, things could change. But so far, that's what I want to buy. Starting from here, maybe a bit lower, we have several supports to pay attention to and to try the buy. If we do have this one more drop, remember, it will also be a bullish hidden divergence, which will confirm one more possible buy to happen. The next one is the pound Kiwi, which I've been talking about so many times. It's going and completing this double wave. Get ready. From here, we are going to start and collect buys. Ideal would be if this double wave meets with this double wave, and that's a bit below 202 or something like that. Pay attention to this. Could turn to be wonderful buy opportunity. Alternative would be if it is just bouncing from here, breaking above this trend line, and then we will start to collect buys from a bit higher levels than we wanted. Okay, so attention for this one as well. Nasdaq, very interesting setup. It broke this trend line we have through the bottoms, right? And it was very beautiful. So I would just say once and while it remains below the last stop, we should be here under bearish pressure. And if I read the daily chart correct, we should be able to see that on daily 20 MA, and then because of band to band and duplication, we might see that also on the opposite Bollinger Band. But if you short such thing, it's only with very small risks, okay, and protecting last high. Very small risk, protecting last high, very important. Why? Because if that's about to make the move, that's a pure risk-reward trade where you can earn much more than you risk. Therefore, small risk is more than enough for such opportunity. And well, basically that's all. And that's the main things I have on my list for today. Once again, it's very important to remind and print it on a big page and put it in front of yourself. Non-farm payrolls with moves might be tricky, so risks must be small. Okay, we want it or we don't want it. That's normally how market goes, and we have to respect that. So thank you for watching. I wish you a wonderful day, good trading, and I'll see you again tomorrow. Of course, yours, Vladimir.